Welcome to FOMO Consulting for your daily AMC stock analysis video on Sunday, June 20th. Ladies and gentlemen, I am super bullish about this upcoming week. We'll discuss this week's battle plan, and as always, the apes are winning, the diamond hands are winning, most importantly, the retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It is a newer channel. Let's get into the video. To everyone who has liked, shared, commented, and subscribed, thank you. It means the world to me. So let's start with a quote. We the people. Three of the most powerful words you will ever speak from the United States Constitution. But this goes far beyond borders in this case. This is a worldwide movement, and we the people won't change. We the people are seeking change. We the people are seeking transparency, and we the people are seeking financial freedom. And we the people will not sell, we will not cave, we will not go away. We the people will win. Broader market from Friday, absolute bloodbath. I quite frankly don't expect much better Monday. We'll see what the futures look like later this evening, but overall it's just probably going to be a very volatile market throughout the coming weeks due to inflation, interest rates, all kinds of concerns around the broader market. But one potential very bullish catalyst for us in AMC or GME or what have you is the Federal Reserve to release the 2021 bank stress test results June 24th. I believe that's Thursday. That has been happening, or did happen around a month ago or whatever, and this could be a huge bullish catalyst along with some regulation based on those findings. No doubt they're expediting these regulations in SEC, DTCC, SEC around their findings and around the over leveraging and certainly the huge amount of margin that is out in the market these days. So we could very well see a huge catalyst along the broader market, specifically for AMC, GME, and others, based on these results being issued. And as you can see, there's a lot of earnings this week that could be catalyst, but BlackBerry, as it is a quote-unquote meme stock, has its earnings report on Thursday. So if you're invested in BlackBerry, certainly pay attention. Crypto this morning is taking a pretty good hit. Had a bit of a recovery yesterday, but overall, in general, everything is down this morning, 2 to 4%. But no doubt it will recover again. I believe it's a good long-term play, but certainly volatile these days. AMC performed very well on Friday, I believe. Found a lot of strength, power hour, a lot of exponential circumstances that I'll show you very shortly that were outside of our control. But we closed at a very strong $59.26, down $1.47. Could have been far worse. Overall, the Russell 2000, we mirrored it almost to a T. We're linked to that certainly. But as always, we are one of the more active stocks and certainly the most popular. Keep in mind, we were up 11% this previous week and 104% in June. What leads me to believe we're going to have a great Monday is the strong consolidation and even a little bit of bullish price action after hours on Friday. We didn't sell off. People aren't paper handing it. They're actually diamond handing it. That way we saw that consolidation and a bit of bullish price action. So again, I'm very, very bullish going into Monday. So looking, you can clearly see on the 10-minute chart, we're clearly in an uptrend. We need to break that $64 level, and I believe we certainly will. Again, closer look to the trading week. They were defending that very heavily, and I'll show you very shortly what I believe was going on. Again, we own the $50 floor. Who knows, we could possibly retrace to the 50s. for a period of time this week and then launch. There's a lot of different scenarios out there, but I do believe we will have a very bullish week. We need to break again the $62 to $64 level, and once we break 70, we launch. The only thing that gives me a bit of pause, at least early in the week, is we need to reverse that trend on the MACD. Again, it's just a moving average, but it is in a very, very shallow bearish direction. I believe we can turn that with a couple green days. We'll be back in bullish territory without a doubt. The RSI is bouncing and looking beautiful going into Monday, so I personally am looking forward to a very green Monday. Again, 4-hour chart, shallow MACD on the bearish side, no doubt because of all the defensive posture our opponent took defending that $64, $65 level this week. But we did kind of reset the indicators. RSI is back in the channel. MACD can easily cross over and we'll be back to the races. An alligator is very, very hungry. Again, MACD, again, just a moving average. This is a momentum-based stock. We like to see which way it's trending. RSI back in the channel. MACD is cooled off, but I believe we're ready for another bullet run. And again, we are stair-stepping our way incrementally upwards, putting more and more pressure on our opponents. Good to see. So let's look at the Ortex data for IWM, which is the ETF that has the most shares of AMC. AMC is the #1 weighted stock in that ETF at close to 9 million shares. GME is #3 in that ETF. No doubt, as you can see, they have been shorting this very, very heavily through the borrowed share volume bars, which are the gray bars. The yellow bars are the failure to delivers. If you look in mid-May, around the 14th or so, a huge amount of failure to delivers for this ETF. No doubt they've been trying to short this down. The borrowed share volume, as you can see, has trended off since the April timeframe, but no doubt they have been heavily, heavily shorting this. And there's been a method to their madness of keeping AMC and GME from running through these ETFs to benefit them, obviously, in the options chain. So let's look closely. So IWM closed at $2.22 as of Friday, which is key. But as you can see, bottom left, AMC is the most heavily weighted, 0.76%, about 9 million shares, and GME is #3 at 0.43%. Over on the right, you'll see shares outstanding for this ETF at 302 million shares. So let's look at the options chain. So this is puts only. Puts only. So closing at $222 and change, that put 255,000 put contracts in the money. And if you look at the open interest throughout that options chain for puts, they had every intention to get it even lower, but they couldn't because AMC held its own, GME held its own. They did everything they could. If you look just at the $220 strike level, there's 56,000 contracts in the, out of the money that expired worthless, but they would have loved to shove this down another $3, right? So there was a lot of motivation to short down the ETF and AMC and GME specifically and individually to get to their price point to put as many contracts on the put side in the money. So again, looking at the options chain, if you look at the week expiring this past Friday, 6/18, look at the huge amount of open interest on the put side at almost 1.5 million contracts of open interest in puts only. That's 3 times the amount of calls. And again, this ETF is built of a lot of, GME, AMC, a lot of recovery plays, things of that nature. So they had every intention of shorting this down and the individual stocks down to benefit the put open interest. So let's look at the short data. So current short interest, this was as of Friday, basically 142 million shares short. And again, 302 million shares outstanding makes it 47%. Huge amount of short interest. And if you look at the failure to delivers over on the bottom right, you'll see we're just on that one day alone where I showed you that spike, almost 4.4 million shares were FTDs. Absolutely huge, but you can certainly see the motivation through those monthly options expiring and why there was such selling pressure and price suppression for AMC and GME individually and through the ETFs. They did everything they could to get those puts in the money. So speaking of ETFs, good news. Meet the ETF portfolio managers trying their luck with meme stocks, AMC and GME. So there is and will probably be additional buying pressure to add GME and AMC to various ETFs going forward. So that's great news. So a lot of speculation, certainly a lot of hope around NSCC 2021-002 being approved tomorrow. Cross your fingers. We can only hope, right? But also this week, and I know there's many videos and due diligence around the T+35 settlement. We'll see how that plays out, but certainly the data would allude to a huge buying spike Monday, Tuesday, and Wednesday, but we'll see. And I am exceptionally bullish, at least for tomorrow and Tuesday. So again, Fentel still showing a short squeeze score of 99.93%. Doesn't get much better than that, folks. A lot of great movies coming out over the coming weeks. F9 comes out this weekend. Again, another huge catalyst for AMC. A lot of discussion, no doubt, will occur later this week and into next weekend. Black Widow comes out in a couple weeks, June 9th. The Boss Baby, family film, coming out July 2nd. July 16th, Space Jam, another popular film, likely to drive a lot of people to the movie theaters. Quiet Place 2 is absolutely rocking it, almost 200 million worldwide, 115 million domestically, absolutely huge pre-pandemic, pandemic record, and it just continues to add each and every day. And great article, check it out, AMC stock soared, now the movie chain's foot traffic is improving. Again, a lot of bullish news around AMC lately and just the recovery in the fundamentals of the business. Short interest obviously has not changed, but short interest percent of free float, 13.45%. Utilization, I think, is the key indicator here. We need to watch in shares on loan. Utilization has spiked up almost to 95%. I'm anticipating Monday, Tuesday, Wednesday we'll probably hit that or close to 100%. This is a very hard to borrow stock, and I believe you'll see that indicated in the very near term. So if you look at the AMC Ortex data chart versus the failures to deliver, same time frame as that ETF, right? Around that mid-May time frame, you'll see the huge spikes in the yellow bars. Just on the 11th of May alone, there were 3.7 million shares failure to deliver. Obviously, mid-May was a crucial time point. There was a lot of options expiring. They were trying to suppress AMC, GME, and others from running. They failed to do so. Not only did they fail to deliver, but they failed to suppress. Good job. So let's look at the options chain. Obviously, we closed at $59, 411,000 calls expiring in the money. That usually bodes very, very well for us on Monday. Big green week. I do not believe all of these shares have been hedged for, specifically coming out into next week. 7.86% is our average gain on Mondays over the last 10 trading days, and 5 out of the last 10 have been 13% or better. Very, very bullish. So let's close with a quote. Great heart will not be denied, by J.R.R. Tolkien, famous author. We have our hearts and souls into this. We are diamond hands. We are apes. We are retail investors. We are seeking change, and we are making it. We are accomplishing our mission each and every day. I have no doubt that we will be successful. I feel this week will be bullish. I'm looking forward to tomorrow to see how that plays out. But keep in mind one thing. They cannot take away your heart. They cannot take away your conviction. They cannot take away your soul. The worst they can do is take away a few dollars, forcing down red candles to try to shake you out. But they cannot take your heart. So if you found this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. As always, thank you very much for watching, and I hope your life is full of green candles, and most importantly, happy Father's Day to everyone. Take care.